Hey, what's up, guys? It's Larry, the mortgage guy, your mortgage insider, and certified veteran mortgage advisor, as you can see here. And I'm very excited to bring you this class because it's my third attempt to go live today. And I just want to get through it because it's a commitment I make. So I really appreciate you guys being on this call. So today we're going to talk about the home buying process. We call it first time home buyer webinars, but I'm going to focus on a specific part of my first time homebuyer webinar. I actually teach 3 different classes when I do the first time homebuyer webinar. I talk about the top 10 questions and honest answers to them from a lender. I talk about the questions that a lender should ask you before pulling your credit or basically taking a full application. I talk about the 5 things that you should not do, and it's not what you think. It's my version, but it's 5 things that you should not do if you're buying a house. So again, we're going to focus on uh, one part of that webinar, which is going to be questions that your lender should ask you before you actually have your credit pulled or fill out a mortgage application. Okay, so uh, we're going to go ahead and get started. Uh, Quick introduction. I'm a certified veteran mortgage advisor at the Larry Lee team. I've been licensed since 2016, which is 6 years. It's longer than I thought it was because we had a conversation where my wife was there and I was, someone asked how long has she been in the business, and I said a couple of years, and she's like, it's been like 5 years. I'm like, holy crap, that means I've been in it for longer because I'm the one who brought her in the business, right? I have a side hustle as a social media marketing coach and running my own ad agency, Robots LLC. The reason why I bring that up because I'm basically trying to marry my 2 passions, which is the mortgage business and social media, to bring awareness and content to the general public and hopefully better educate them on the home buying process. I'm licensed in 10 different states: Arizona, California, Florida, Illinois, Indiana, Louisiana, Michigan, North Carolina, Tennessee, and Texas. But my branch that I work for is licensed in 30 plus states. So there's a strong chance that we can help you no matter what state you're in. Okay. NMLS number is 1440741. Right. And my mission is that I love the mortgage business, but was fed up with the lack of education and information clients were provided during their application process. So I created a first-time homebuyer coaching class for mortgage clients that provides instant access to answers to questions and simple explanations to the mortgage process and how to qualify. I also provide one-on-one coaching for those who want it. So basically, I want to create enough content so that anyone looking to buy a house can find the answers online without having to engage or talk to a loan officer, because I know that we're intimidating. We're salespeople, right? So, like sort of like Netflix for the mortgage process. I want people to be able to get information like that without having to talk to an actual person. But if you want one-on-one coaching, I can provide that as well. But of course, you can't ghost me or hide from me. I would actually have to engage with you, and more than likely, I'm going to ask you a few questions about yourself. Okay. But unlike other loan officers, I made it my passion to coach first-time homebuyers on the mortgage process, and that makes all the difference of how I've helped hundreds of people get on the right path to home ownership, with many of them becoming homeowners. You remind me of many of my smart, successful, and savvy clients who are now homeowners because you are taking the right step on the home purchasing process, like they did by basically getting educated. That's why you're in this video, right? The home buying process is very confusing to most people, but that is why I am here to simplify the process and make sure you're 100% prepared in the home buying process and to become ahead of the competition. And what I mean by that is I am able to provide, for example, a TBD pre approval. What that means is that we can pre underwrite you guys to the point where, as far as we can, until we need the property. So basically, all we need left would be the property to finalize the loan. Okay. So basically, you're already conditionally approved, condition on the property, and I can give you a loan commitment letter. So basically, you offer that on day one with the offer. So it's as good as cash and closes faster because we've already finished the underwriting part on your part as the borrower, right? So it makes for quicker closes and more competitive offers. Okay. My wife and my kids, of course, specifically Bruce and Hunter, because they're both on the spectrum for autism. They're both nonverbal, and I want to be able to provide ABA therapy for them, which is very expensive. So my goal is to have enough resources to provide that for them this year. And my other why is helping veterans. And it's actually described in this Facebook post that I made. My father was living in Da Nang, Vietnam during the fall of Saigon. My mother lived in Saigon. My father left by helicopter, my mother by boat. It was U.S. soldiers who helped them get in the helicopter and on that boat, and they met in Hong Kong, China. If it wasn't for U.S. soldiers, if it wasn't for a U.S. soldier, my parents may not have survived, met, and had me, and I wouldn't have what I have today. I might not even exist. Those U.S. soldiers are veterans now. Thank you, vets. I owe you my life. And I assume that they're veterans. They can still be active duty, but it's been a while. And also, uh, the idea is if my parents weren't rescued from Vietnam, they would never have met, and I wouldn't have been born, and therefore my sons would never have been born. So I basically owe them everything. Okay. Now, before I continue, I want to make sure my sound is working well, because that's the reason why I'm here on my third attempt, because the sound was muffled, and someone said that to me. They were nice enough to let me know that the sound was muffled, so I'm checking right now. The idea is if my parents weren't rescued from Vietnam. It sounds good, so we can go ahead and move forward. So again, I do a first-time homebuyer webinar where I actually cover 3 classes. The first class is honest answers to the top 10 home buying questions. And then I talk about questions loan officers should ask before taking an actual 1003, which is a mortgage application, and basically what they should do or ask you before they pull your credit. And the top 5 things not to do when buying a home. And it's not what you think, meaning like it's not what you typically hear from other lenders and other real estate agents. It's my version. Okay. It's a little bit more blunt, a little bit more honest. Okay. Disclaimer: I am not trying to piss anyone off or make anyone feel stupid. I'm simply trying to provide transparency, because most loan officers are doing a horrible job of telling you the truth. Also, any information I share is general knowledge I acquired through training and experience. Every situation is subject to a case-by-case basis, and exceptions are always possible, especially with different lenders and financial institutions and states. So basically, even if I tell you something's correct, it may be incorrect someplace else, or maybe I am incorrect. Who knows? All right, so we're going to cover questions loan officers should ask before taking an actual 1003 or mortgage application. Okay. The first question they're going to ask you, or they should ask you, is about your work history. Specifically, what are you doing and how long have you been doing it, right? The next question they're going to ask you is, how much money are you making per month? Now, I'm going to break down why they're asking you these questions, but basically what they're trying to do is they're trying to find consistency and something that they can use in terms of qualifiable work history, right? So a job that you've been doing for 2 years. It could be self-employment. It could be owning your own business. It could be an hourly wage job. Doesn't matter, as long as it's income that you're making through some sort of action, right? Again, it could be self-employment. It could be owning your own business. Actually, you can have no work history. You could be retired and get money from retirement, or you might not be working at all, but you have enough assets to pay yourself an income, right? But basically, we just want to know what your work history is. And, if you're retired, we'll find out. If you're not working, we'll find out. And then we'll see what other incomes streams you're making, right? When we ask about income, we're asking about how much money you're making in terms of whatever it is that you're doing, right? How are you paying for stuff right now, right? So again, we ask for 2 years worth of history. The reason why we're asking for 2 years worth of work history, because we need consistent work history, and there's no way to measure consistency without a comparison. Meaning, you can't look at 1 year and think to yourself, okay, this is consistent. Well, no, consistent means there's a measure of consistency. There's you can look at 2 different things and see that it's consistently the same. You can't compare with only one, right? So that's why you need 2 years. Okay, so it must be consistent. Okay, and W-2 or salary or hourly versus self-employment or commission, meaning we're trying to find out how you're making your money, and how is it documented, right? Is it documented as like a W-2 salary, hourly? Is it something that you get a pay stub every 30 days? Or if you're self-employed, then maybe it's on a tax return, right? Commission as well. We might actually ask for like the last year of pay stubs for the last few years to see what your commission amount was, things of that nature. Okay, so we're asking because we want to know that it's a legitimate qualifiable income, meaning how much money you're making and how it's being made, and it's something that we can document, right? That's why we ask those questions. Okay, without that, the conversation ends. Like if I ask someone, what are you doing for a living? Oh, I'm an unemployment. And I'm like, for how long? Like for the last couple of years. Like, do you plan to get a job? Like, no. Okay, well then the conversation's over. There's no point in me pulling your credit because you don't have any income, right? I mean, that's literally the first question you should ask is, where are you making your money and how are you making it, right? If the answer is like, I don't know, or I don't have any, then why are we talking, right? So that's kind of where we're supposed to be at when it comes to uh, the first question, right? You need to know if they're making money. Otherwise, how are they going to pay a mortgage, right? Credit scores. I would say this next important question, maybe the most important question, but really the next important question, because credit scores for most people they don't know for sure unless they actually talk to another lender. Now, when I say they don't know, I really mean that. Like someone might be like, "Oh yeah, I'm a 700 credit score based on what? Well, based on Credit Karma or based on TransUnion, Equifax. My Experian, my bank told me that's not your credit score. Okay. Uh, at least not in the form that we're asking. Okay. We're asking when I ask for a credit score, I'm asking basically where do you think you are credit wise, and I want to know where you got this information. Right now, if you said I just talked to a lender yesterday, he pulled my credit, he told me his score is a 700. Okay, I can take that answer as an actual you are informed, but most people don't have that, right? Most people they don't they didn't go with the lender yet. They don't know what their credit scores are at yet, so they're using what information they were provided. In terms of consumer credit, which for the most part is not what lenders use when they qualify you for a mortgage. Okay. But I ask for a couple of reasons. Number one, I want to know where you think you're at. And if you're like, oh, it's horrible, I'm at like zero. Okay, then yeah, I don't know why we're talking. If you have zero credit or you have horrible credit, uh, maybe you need a sense on how to improve your credit. But in terms of buying a house, it's probably not going to happen if you really know that your credit sucks ass. And when I say suck, I know it's relatively speaking, but meaning like it's below like 100, 200, right? Of course, if someone says I got perfect credit, I got 800 credit scores, 700 credit scores, whatever, and they're saying very confidently, maybe it's not the right score, but it just means that they know that they're doing well in terms of making their payments and such. So that means that they are definitely someone that we want to talk to. And we definitely someone we want to try to help, right? Not saying I don't want to help the guy with bad credit or zero credit, but I can't help them if their scores are legitimately that low, right? Whereas people with 800, of course, I can't help them, right? So that's one of the reasons why we asked that question. And also how much do you pay monthly on credit cards, debts, card notes, student loans, basically stuff that you owe money on. So electricity, cell phone bill, rent. Those aren't debts. Those are you paying for a service that keeps continuing as long as you pay. As if you don't pay it, they discontinue that service, meaning you won't have electricity anymore, or you won't have um, a cell phone anymore, right? Or at least you won't have service, right? Debts are like stuff that you borrow money for and you got to pay back, like a car note. You bought a car. Let's say you pay $50,000 for the car. You're making that $500 a month payment. You got to pay $500 a month until that $50,000 paid off. That's a debt, right? So I'm asking that question because I want to know, uh, you know, if there's actual legitimate room for a mortgage, right? So let's say you tell me you make $500 a month and you have $1,000 car payment, and that's all the information you have. I don't know how you're even making your car payments, right? Let alone adding a mortgage on top of that, right? So, it's a question to just make sure that we set expectations and we know what we're working with, right? Like if you tell me, well, I got $1,000 car note, I got another $1,000 car note, I'm paying child support, I have student loans I'm paying $500 a month on. I owe money to IRS, I'm paying $1,000 a month, but my income's $2,000. I'm gonna be like, well, how do you expect to pay for a mortgage? And I'll be really upfront about it too, you know. So because I want to know, like, what do you have planned or what do you have in mind? Because maybe there's something you haven't told me yet. Maybe mom's helping you, or I don't know. Maybe you have a bunch of assets you're using and you're just not making your payments. I don't know, right? So I want to know what we're working with in terms of your income and your outcome, right? And when I say outcome, I'm talking about what are you putting out, right? Payable, right? Um, so another thing about asking the credit scores is I want to know where you're at because I want to kind of set expectations. So if you tell me that for sure you have 400 credit scores. I'm like, well, we can start at 580. So I don't know if I can help you, but we can look at your credit. But if you're not at least a 580, then we're not going to be able to help you for sure. That's a cutoff, right? If you tell me you're in the mid 600s, okay, well, you're probably definitely going to be okay with FHA if you're in the mid 600s or higher, and you know for a fact that's true. Conventional might work out, but you might still not qualify conventionally, but at least you can qualify FHA, right? If you're saying that you have 680, 700, 800, I'm not even worried about it. We're just going to see which loan product is the best for you, right? So I do set expectations in that sense, okay? And of course, again, I talked about, the reason I ask about liabilities or debt is because I want to know what your buying power might possibly be before pulling your credit. If your buying power is 0 or negative, then I might dig deeper before I actually feel comfortable pulling your credit, because I don't want to pull your credit knowing you're not going to qualify. That doesn't make any sense, right? It dings your credit for no reason, right? So I do some quick math in my head. Sometimes I actually build like a calculator on Google Sheets, right, that I use. And again, it's about setting expectations. If someone says I make $1,000 a month, I pay $500 in car notes, and I want to have $1 million house, I'm gonna be like, who else is on the loan? Nobody. I don't know if that's gonna happen, right? I don't want to pull your credit if you really have that budget and you think you're going to qualify, because probably not gonna work out the way you want it to work out, right? But I'm always willing to pull the credit and everything like that if you insist. I think I have to, by law. I have to actually pull your credit if you insist. But like me, I have to take your application. I can't deny you like over the phone using state information. I have to like literally have evidence or documentation as to why you're being denied. I think, but more than likely, I'm going to make sure you know where you stand, right? So that's why we ask questions about credit. The next question is funds prepared for a home purchase, right? And 401k. Do you have a 401k? Do you have savings, right? This one, it's important, but it's not. I wouldn't call it a deal killer. What I mean by that is, worst case scenario, we can try to find different ways of getting funds, like through down payment assistance, or maybe you have someone who might be able to gift you, a down payment. Um, some people, they think they have nothing, and then I ask them about a 401k, and they have like more than enough in the 401k to put a down payment and closing costs, and then some, and that's how they qualify, right? And I've actually had a lot of people how that's how they 100% qualify. They thought they were not qualified until I asked them about the 401k, and it turns out that's exactly how they qualify, was because of the 401k, right? So that's why I asked that question. But a lot of people don't think about that, and I think a lot of lenders might miss that question, right? But it should be plainly obvious that it's going to cost money to buy a house. Even if you have down payment assistance, you still have to pay for like closing costs and appraisals and things of that nature. So more than likely, something's going to come out of pocket. Sometimes you can set yourself up in a way where sellers are paying for closing costs, and the real estate agents helping you pay for closing costs. You have down payment assistance, and maybe you come with nothing at the table. But that's a very rare, like 1 in a million kind of situation. So I wouldn't set you up to think that that's possible. I would tell you, more than likely, you have to come up with something. It's just a matter of how much. But we don't know until we actually look at everything, right? But I just want to know how prepared you are, right? So I'm asking this question for two reasons. Number one, logistically, where's your buying power? But number two, are you prepared, right? If you like, I don't got nothing. I haven't even decided to start, saving. Then you're not prepared to buy a house, and you're probably going to deal with a lot of disappointment, a lot of waiting, right? Now, if you're like, yeah, I got 10,000, 20,000, 30,000. Okay, you're a little bit prepared. If someone says, yeah, I know exactly how much I need, I'm buying a $500,000 house, I want to put 20% down, so I got what is that, $100,000, and I have another $50,000 for closing costs and things of that nature. And I'm like, okay, this person's prepared, this person's ready to rock. So let's go ahead and pass this question. We're done, right? I don't need to worry about it, especially if they talk with confidence. I don't think someone would lie about that, right? But if someone's like, I got something, not really much, I can save if I have to, they're not ready to buy a house, right? And I have to just be prepared to coach them through this process. Again, a lot of this is listening, right? I'm asking questions to listen to kind of understand my buyer and where they're at, right? Uh, and of course, I like to break down how much is required to put down. So if you're looking to buy FHA, well, 3.5% down. So if you're buying a $100,000 house, that's $35. You're buying a $200,000 house, that's $7,000, et cetera, et cetera, et cetera. Conventional, same math, right? If you're buying a $100,000 house, $5,000, right? If you're buying a $200,000 house, $10,000, right? I call it secret conventional. It's not really secret; it's just no one knows about it, no one really talks about it. But it's the conventional home rate where you get 3% down, right? Depends on your income and where you're buying, etc. So ask your local lender. If you want to talk to me, I can talk to you about it. But there is a 3% down conventional loan, which is actually pretty cool, right? I think you actually might get a lower interest rate as well. With a VA, there's 0% down. That means if you are a veteran, or you're active military, or you're married to someone who's active military or a veteran, then you can actually buy a house with no money down, because the VA will take care of that part for you, and then you only have to worry about closing costs and such. USDA is again 0% down because they're trying to encourage people to move to rural areas. So they're willing to pay you. Basically, when I say pay you, they're willing to make it easier to move into their areas. So they'll accept a 0% down home purchase, right? And of course, there's closing costs. Okay. If someone asks me how much you're supposed to have, I always say rule of thumb 10% down, right? You have 10% down. Let's say you're doing conventional, that means you have another 5% for everything else: closing costs, appraisals, reserves if you need it. Reserves, I mean money after you close, right? They measure that based on monthly payments. How many months of reserves do you have? Do you have 1 month worth of reserves? Do you have 10 months worth of reserves? Do you have 100 months worth of reserves, right? So 10% is a good rule of thumb for me, because I think if you have 10% down, you pretty much have enough to cover everything. Of course, there's things like buying down the rate, especially in this market. You're watching this, later on. This is like 2022 in the middle of the year where the market's crazy and the rates are crazy. So possibly you have to buy down the rate. You're forced to buy down the rate. So that's going to add another uh, bit of amount to your closing costs. So it really depends on the market as well. Okay. All right. So student loans. The reason why I ask this question, because it's not something that I was trained or something that people told me you should ask. It just came about because I was starting to get a lot of applications where the clients were under forbearance on their student loans because this is COVID time, quarantine time, right? Pandemic time. So they consider the pandemic a natural disaster. So a lot of student loan, I guess, creditors were converting people to forbearance, meaning they can't make their payments because of the current situation. The problem with that, though, is if you're under forbearance, then you're basically telling everyone on record, the government, etc., that you cannot make this payment. So if you can't make a student loan payment, how can you make a mortgage payment? So if your student loans are under forbearance, we're going to have to address that and fix it. And it could take up to 90 days to fix, maybe even longer. Sometimes it could be immediate. It depends, right? But that's something that you have to fix before you can even move forward. Same thing with like government debts. If you owe the IRS a bunch of money, more than likely you're gonna have to take care of that first before you can actually buy a house. Now, if you put yourself on a payment plan, then you don't have to pay it all off at once. But let's say you don't have any payment plan, and you have shown zero effort and zero setup or plan to pay the IRS back, and there's a debt, you're not buying a house, right? So that's the reason why I asked about the student loans thing. I guess I can ask about IRS and taxes, but not very many people are in that situation where a lot of people have student loans. Okay. Um, Again, it's the difference between deferred and forbearance. Deferred means you're not making a payment for whatever reason. You have income based repayment plans, or you're still in school, whatever. So you're not making payments, but it's not because you can't make the payments, because they're not forcing you to make the payments. Whereas forbearance, you're supposed to make payments, but because of the certain situation you're in, you're asking for forbearance, means you cannot. And again, you're on record telling the world, I can't make a student loan payment. So if you can't make a student loan payment, how can you make a mortgage payment, right? Um, Again, uh, student loans is really important. Plus, it also helps me determine how to calculate your student loan liability, because there has been new information where they actually updated how you are hit for student loans, right? So let's say you're not making a payment on student loans right now, but within 30 years, you're going to make a payment. We still have to figure out how much that would be in terms of taking away buying power. So 1% is like conventional loans, 0.5% is like FHA and VA government loans, right? So it really depends, but it helps, and it actually can be a game changer in terms of how much you qualify. I've actually had people who didn't qualify, but then when they changed the laws from 1% to 0.5%, people started qualifying. So that's another reason why I'm asking those questions. Okay. All right. Red flags. Now, this is a question that I would consider kind of an overarching broad stroke question. It gives the borrower a chance to sort of uh, ask me questions and bring stuff up that may have concerned them, or at least bring stuff like out of the closet or from the grave that they may have forgotten, right? So I asked them, this is how I always tell them, I have to ask everyone this question, whether or not they tell me they have perfect credit or they have shitty credit, doesn't matter. I go, okay, I have to ask this question to everyone. Um, any red flags that you want to ask about or volunteer or discuss, like bankruptcies, foreclosures, money owed to the IRS, student loans and debt, back child support, being sued by the are you being sued by anybody, or are you party to a lawsuit? These questions are vital because these are things that might not be obvious uh, in terms of your everyday thinking, but it can be literally a deal killer, right? Meaning, how recently was your foreclosure or bankruptcy? If you owe money to the IRS, like I brought up before, your student loans in default is really bad too. I mean, you can make a government debt payment, you're not going to be able to get a mortgage, right? You got to fix that, right? If you owe child support, again, that's kind of a government debt type of thing. That's bad news if you're behind on child support. If you're being in the middle of a divorce, you're not divorced yet, that changes things. Like, in Texas, in California, and certain other community property states, if you buy a house and you're still sort of married with someone, and when I say sort of, I'm talking about like you're not officially divorced, they actually have right to the house as well, right? So that could be a problem. Okay, so those questions are there to sort of try to keep us from being surprised at the very end about certain things that can stop or kill a deal, right? And I would say most people tell me no, and it's correct. But some people have told me no, and it's like, whoa, no, this is you definitely have something here that we need to deal with or worry about. And I'll actually ask them, hey, I asked you in the beginning, was there any red flags, whatever? How come you didn't bring this up? And they might say, oh, I forgot, or I didn't know that's what you meant, or whatever. But I'm pretty sure 9 times out of 10 they were just hiding it from me. They're hoping I didn't find it, right? So that way I'm asking the question to give them a chance to volunteer, but also it covers my ass because I'm like, I did ask you, right? And my boss says, hey, how come this deal died? How did you come you didn't know about this and this? I did ask them in the beginning and they didn't tell me about it. So how much to know if they're lying to me, right? Or omitted. I wouldn't say lying, but they omitted or left something out, right? Or they forgot something, right? So red flags is definitely a question you should ask everybody, right? And of course, I'm telling you all this, but it's really complicated. So just call me, right? Like if you're like, I got a red flag. How do I address? I won't be able to cover all the potential red flags on this call or through a Q&A. So just call me and we can discuss it privately, right? And in deep detail, right? So yeah, any questions on what I just presented? Again, these are the questions that a lender should ask you before pulling your credit. I mean, at least that's what I do before I pull credit, because again, not that I don't want to pull everyone's credit, not that I don't think it's you know it's worth it to pull other people's credit. Is I'm trying to protect the person's credit scores and their credit report. I don't want to ding it or get an inquiry if it's unnecessary. And at the same time, I'm saving my time and energy, and of course, it costs me money to pull your credit, right? So it just makes sense for me to make sure that you don't have anything that might disqualify you from the get, right? Because why would I pull your credit if I already know that you're not going to qualify? Unless I'm trying to offer you assistance, which I'm always willing to do if that's what is needed. Right. So, any questions? Nathan says Larry is amazing person, VMA certified. I really appreciate that, Nathan. Lion Regis. That's pretty funny. Um, and of course, I'm honored that he's actually watching my live stream because he's a fellow loan officer. We used to work together. We actually do kind of sort of work together, but we used to work at the same mortgage company. He said, "Pull that credit, my guy." Yeah, I guess with Nathan and other loan officers, I wouldn't worry. And he brings up a pretty good point. At least he inspired a good point. In order to become a loan officer, you have to have decent credit, right? Oh, well, you don't have to have perfect credit, but you can't have shitty credit, right? And that makes sense, because why would you take advice from someone on how to buy a house if they themselves can't even take care of their own personal finances, if they themselves have bad credit, right? Like, how can a person with bad credit consult with someone on how to get good credit, right? So, as a loan officer, we're supposed to command the confidence of the community, whatever that means, right? It's one of the first things that they teach us when we first get licensed, right? Command the confidence of the community, right? I'm pretty sure the confidence of the community also equates to being a pro, being an example. You know, you you're practicing what you preach, right? it would be pretty foolish for a bunch of low credit, bad credit, irresponsible, financially irresponsible people helping other people become financially responsible, right? So it makes sense that they would require us to have our credit pulled and looked at, and that we have decent credit. I'm not saying we have perfect credit. I definitely don't have perfect credit, but we have to have good enough credit, right? Decent credit. So that's why Nathan probably has no problem with people pulling his credit, because he's not worried. And I'm the same way. I'm not worried. If you want to pull my credit, that's cool. Doesn't matter to me. I already bought a house and I'm good. Got a low interest rate. And for the most part, I didn't even have to be on the loan. My wife bought the house, right? But I'm still licensed as a loan officer, so I know that my credit is decent, right? But again, it makes sense to me, right? So credit is really important, obviously, not only for us loan officers so that we can do our job, but for anyone wanting to do anything, including buying a house, right? So yeah, thanks for your comment, Nathan. It's kind of funny that you brought that up. Actually, might be a cool video to talk about that. Does anyone else have any questions or comments or whatever before I go? All right, cool. I really appreciate you guys being a part of this call. Of course, the idea is to provide you information that you need. Any question that you may have, I want to answer. So you always reach out to me later on if you want to. You can call me 832-606-2193, or you can text me, or you can email me, larrylee@openmortgage.com, or go to larrylee.com. There's plenty of ways to contact me there. I make it very easy for you. Even if you're like on Pinterest, you can reach me through my larrylee.com page, or you can just Google me, Larry the Mortgage Guy. I'm pretty sure you'll find me. I actually made it very intentional that if you were to Google Larry the Mortgage Guy, you'll find me. It's funny because I was doing the whole Comic Con thing, right? And I was talking about characters and influencers, whatever. And my son asked me, "What are you cosplaying at?" And I'm like, "I'm cosplaying as Larry the Mortgage Guy." He's like, "That's not a character." I'm like, "Yes, he is." It's like, "No, if I Google you, I wouldn't find you." I'm like, "Bet." Google Larry the Mortgage Guy and you'll find me. And he Googled me and he found like thumbnails of me and videos of me. He's like, "Holy crap." I'm like, "I told you, dude." So yeah, I'm a character. I'm Larry the Mortgage Guy. Yeah. So yeah, it's funny because again, he called my bluff, and I knew if he Googled me. I mean, he did the Google, like voice Google, like, "Hey Google, search Larry the Mortgage Guy," and I popped up. So it was kind of cool that I was able to deliver on his little bluff, right? So yeah, after that, he uh, he accepted that I was cosplaying Larry the Mortgage Guy, and he actually bragged about it to his cousin, like, "Oh yeah, my dad, he's a character. You can Google him, you'll find him. He's on YouTube and everything." And his cousin was like, "No," I'm like, "Yeah, watch." And he actually showed him. So it's kind of funny watching that. And of course, it made me proud that my son was proud of me and bragging about me to his cousin. But it was just kind of fun to see the whole exchange, right? So yeah, yeah. So Google Larry the Mortgage Guy, and you'll find me if you forget all this, right? And I will be glad to connect with you and answer any questions you guys may have. Okay. So again, I really appreciate it. This was a first-time home buyer webinar broken down. Next week, I'll be talking about the VA loan, because I'm kind of hopping back and forth. The reason why is because I used to do Wednesdays on VA and Thursdays on the first time home buyer stuff, but because of my summer schedule, because my kids are home, I had to like basically recalibrate, reschedule my time, and I decided to basically put the two classes into one slot and just kind of go back and forth, which kind of sucks, but at the same time, it's actually kind of relieving. But either way, I might go back once they go back to school. I might go back to Wednesday, Thursday. I don't know. We'll see. We'll see how this time slot works. But that's why next week I won't be talking about the first time home buyer stuff. I'll be talking about the VA loan, some myth that I'll be dispelling. But the next topic, so if you are paying attention to the first time home buyer stuff, will be the 5 things you should not do when buying a house. And again, let me show you like the title so you can see like what I mean by that. It's literally top things not to do when buying a home is not what you think. And what I mean by that is not typically what you would think a lender or real estate agent would say. You probably read it before, you probably seen it before. Mine is actually kind of my own, and I made it, and it's very honest and blunt. So if you are interested in seeing my version, tune in not next week, which is going to be I guess the 6th, but come the week after that, which is the 13th. So July 13th is when you get the top 5 things not to do when buying a home. Okay. So again, I really appreciate you guys being on this call. If you have any questions, give me a call, text, email me, whatever you like. This is Larry, the mortgage guy, your mortgage insider and certified veteran mortgage advisor. I really appreciate you guys being here. I'll talk to you guys later. Thanks. That was harmless.